Hey everybody, welcome back to the channel. My name is Kimberly and today we'll be talking about Faber Residence. Hearsay on the ground that it's going to be one of the most anticipated launches in the fourth quarter of 2025. And stay tuned to find out just why it is. So what I'll be doing differently again from the rest of the other new launch reviews you see online is that I'll be going very deep into the investment numbers to assess its viability as an investment product. So without further ado, let's get right into it. So the team and I at JNA Real Estate, we have been extremely blessed over the past 8 years to have helped over 700 clients attain a per annum return of about 19.56% on average, so that they steward their wealth productively and also plan towards their retirement. Let's get on with the project as well as its developer information. So this development, Faber Residence, is a joint development between Guaco Land, TID Residential, and Intrepid Investments. Its site area spans across 277,662 square feet, meaning it's quite expansive, but it's quite low density. Gross plot ratio wise 1.4, and number of stories, I'm looking at 9 blocks of 5 stories high, meaning that the lowest story is level 1 and the highest story is level 5. 399 units in total, and it's 99-year leasehold from 24th of February 2025. Address-wise, I'm looking between 54 all the way through to 70 Faber Walk, which is in District 5. And expected TOP, it's in the first quarter of 2029. So this would be the impression of how it looks like from an area point of view. So in terms of the developers involved, we're looking at Guaco Land as well as Hong Leong Holdings Limited. And TID Investments is actually a joint venture between Hong Leong Holdings as well as Mitsui Fudosan. So if you look at Hong Leong as well as Guaco Land, what they have done together, of course, the most famous would be Lentor Hills Residences. In fact, it's actually the second development in the Lentor Hills collection after Lentor Modern, which was the first ever Lentor project in the whole Lentor cluster, which is a new township. So in fact, Lentor Hills Residences, it was very well received on launch weekend, and I remember this was in 2023 in July. It was during one of the heightened interest rates environment, and in fact, there were a lot of macro uncertainty. Yet, they sold for an average price of $2,080 per square foot. If you can see over here, the one bedroom started from $945,000, 2 bedders were $1.36 million onwards, 3 bedders were upwards of $1.82, and 4 bedders were $2.5 million onwards. Dual key units started from $2.64 million onwards. So if we look at the joint track records between Guaco Land as well as Hong Leong, we're looking towards Springleaf Residence, which in fact was one of the most anticipated and highly raved about project in 2025. So in fact, it sold 92% of its inventory at about $2,175 per square foot simply on launch day. In fact, this was already following the post-area harmonization policy, and I can definitely imagine that in terms of its quantum-wise, it was extremely palatable as compared to the pre-area harmonized inventory that were balanced around the area. So in terms of its locality as well as vicinity, Faber Residence is actually over here, you can see, and it's within 1 km to Nanhua Primary School. In fact, Nanhua Primary School is over here in the Commonwealth Avenue West Road area. And the one other thing I want to take note of is that Faber Residence is actually a stone's throw away from Jurong Town Hall MRT station, which is slated to open in 2028, 1 year before Faber Residence attains its TOP in 2029. And in fact, Pandan Reservoir MRT station, which is just next door, will also be opening in 2028. Together, Jurong Town Hall MRT station as well as Pandan Reservoir MRT station will make up the new Jurong Region Line, which actually connects the Jurong Lake District, which is slated to be Singapore's second CBD in the near future, as well as the high-speed rail, although, of course, for now, nothing has been confirmed and set in stone. And it will be one of the highest footfall areas where it connects with the high-speed rail with Johor Bahru. Okay, so this is actually the MRT map. You can see this is Jurong Town Hall MRT station. It is the second last stop over here, and then Pandan Reservoir station is actually over here. In fact, these two will be the second phase of the Jurong Region Line opening. The first phase will be slated to open in 2026 itself. And you can see that it actually connects all the way to the north of Singapore and makes the distance extremely short. So if we look at the site plan, we're looking at predominantly 2 facings. So we have 9 blocks of 5-story high for each block, and the first facing is actually northwest facing. It's towards the Sungai Ulu Pandan, towards the Jurong Lake District area. And then you have another which is southeast facing, which is towards Faber Walk. So if I were to look at the northeast facing, you're looking towards, let's say, the different industrial zones, but there is definitely an extremely wide setback, and in fact, everything in front of you will actually be more greenery for the near future. And if I look towards the southeast facing, behind is actually the whole cluster of landed, and in fact, you are a stone's throw away from the other condo clusters, which is just across AYE over here. Mainly Park Riviera, Twin View, Whistler, Grand Botania, so on and so forth. So you're away from the whole construction, I would say, zone that happened a couple of years ago when a lot of GLS were being used for building residential sites. Okay, so in terms of the unit mix, I'm looking from 2 bedders, 3 bedders, 4 bedders, and even 5 bedders. For the 2 bedders wise, I think the size is extremely standard, yet also much bigger in feel as compared to the non-area harmonized projects. I'm looking at 2 bedroom at 646 square feet, 20% of its unit mix. 3 bedroom wise, of course, you have more varied options in terms of the unit sizes: 797 square feet, 818 square feet, 861 square feet, 1033 square feet. And in fact, what I like about this project is that it's also very focused towards family-owned stay, as well as something that's much bigger in terms of its unit type. So you have 50% of the allocation of the units going towards the 3 bedders. And for the 4 bedders wise, extremely big floor plate as well, 1119, 1206 and 1270, and it makes up 25% of the entire unit mix. And for the 5 bedder, I think this is an extremely rare catch, 1485 square feet and 5% of its entire unit mix. And why I say it's a rare catch is because within District 5 itself, there are very few projects, especially the new ones, that have the 5 bedder units available. Much less, this is one of the newest projects in D5 that's going to TOP in 2029. Okay, so there's a couple of artist impression. So this is actually how Faber Residence will look like when you're looking towards the Sungai Ulu Pandan reservoir. You can see over here up to 5 stories. In fact, the 5th story has a high ceiling. This is actually the pool area. You can see this is within the development itself. So you might be asking right now, what might the expected prices be? So I'll answer your question with regards to the inception of its pricing, which is the land bid pricing as well as its break-even pricing. So first and foremost, if we see the left side, so there was this article on the 19th of November 2024. In fact, when the GLS was actually released, it actually drew about 3 bidders, you can see over here. And the highest bidder was actually Guaco Land, TID, which is a JV between Hong Leong as well as Mitsui Futoshan, as well as Intrepid Investments. You're seeing 349 million as the highest standard price, which works out to be $900 per square foot per plot ratio. And in fact, if I were to look at the break-even price, it's actually 1682 per square foot per plot ratio. And if I were to add a 10% profit margin as well as a 7% area harmonization adjustment, I'm looking at 1967 per square foot. 20% profit margin, $2136 per square foot, and 30% profit margin is $2304 per square foot. As you can see, in terms of its break-even price itself, is actually one of the biggest indicators as to why the unit will be extremely price sensitive, especially on its launch day, or even so as an average price in general for the development. In fact, that's why a lot of people are hyping up this new launch, because the price itself is extremely, I would say, reasonable and backward looking. So why are people raving about it? So in terms of its price with respect to other different kinds of, I would say, property types, you have the upcoming ECGLS, in fact Woodlands Drive 17. The highest bidder was CDL Divine, City Development Limited, and they bid for $782 per square foot per plot ratio for the land. And in fact, the other EC plot, Senja Close GLS, which is in Pasir Panjang, it actually was bid for $771 per square foot per plot ratio. And now you can see Faber Walk GLS, which now is Faber Residence, was bid for $900 per square foot per plot ratio. So as something that is EC versus something that's a full-fledged condo and it's a residential full-fledged condo, I'm looking at about $900 per square foot, which is about 15 to 16% higher than the recent EC GLS land bids. Do you see why a lot of people are hyping up this project, because fundamentally the land bid itself is extremely reasonably priced. And if I were to look at history, what happened when land bids were extremely palatable in terms of its pricing? First, we look at one of the cheapest GLS land bids in 2023 itself, Norwood Grand by CDL. In fact, Norwood Grand by CDL, it was launched in 2024 October, and I remember it being one of the hyped new launches in Woodlands area because it's one of the few new launches that was happening in Woodlands after close to a decade. And in fact, if I were to look at its land bid price back then, it's $904 per square foot per plot ratio, $4 higher than Faber Residence. Break-even price worked out to be about $1,687 per square foot per plot ratio, very similar to Faber Residence. You can see over here. This is 1,682. This is 1,687. So in fact, you're seeing figures that are like 2024. And how Norwood Grand actually performed on launch day itself, it sold 84% of its units at $2,067 per square foot on launch day, with its one beta starting from $988,000, which is about $1,996 per square foot. I think it's extremely reasonable. In fact, it's a pricing that happened about 2-3 years ago. The two betas were priced at $1,238 per square foot, still in the $1,984 range. The three betas, this actually is one of the star buys. $1.698 million for the three betas, where in an environment, let's say in the Lentor collection, the two betas easily were already costing you at about $1.6–1.7 million for the 2+ study also. And if I'm looking at the four betas, it's $2.238 million at $1,908 per square foot starting from. So you can see that at these kind of price points, their land bid price is $4 higher than our land bid price. Break-even price, you're just a couple of dollars. In fact, I'm looking at about $5 higher than our break-even price. And the developer attained a profit margin of 15.5% for its launch day inventory at about $2,067 per square foot on average on launch day of 84% reception itself. So with these figures in mind, I'm looking at a 2 to 3 years ago kind of pricing where the market was just uncertain, yet people who bought it were actually very, very well priced and priced backwards, meaning that they had prices that had happened way before its time. And that's a very good buy for them because that means a safety net in terms of pricing as of then. And if I were to look at the second cheapest GLS land bids that happened in 2024, again, history repeating itself. Springleaf Residence, land bid itself, it's $5 higher than Faber Residence. And in fact, break-even price, we're looking at $1,688 per square foot, which is about $6 higher than our break-even price of $1,682. So you can kind of see what's happening, history repeating itself, especially in the OCR. You got Norwood Grand, Woodlands, Springleaf Residence within Springleaf, and at the doorstep of Springleaf MRT station, which is at the Thompson East Coast Line. The estimated launch day margin was about 21.9% and it's post-area harmonized. So I'm looking at 92% of reception of its $2,175 per square foot average pricing simply on launch day. Again, the one bedroom prices were starting from $860,000, the two beta price point was starting from $1.08 million, and the three beta price point was starting from $1.62 million, and the four beta extremely palatably priced as well, $2.45 million. And a lot of the units, as you can see over here, they were selling for below $2.5 million. And I feel it's extremely priced sensitively on the developer's part, and that's why it received a lot of reception on its launch day itself. So you can see between Norwood Grand as well as Springleaf Residence, the numbers don't lie. The break-even price, the land bid price, they are extremely close to what Faber Residence is looking at. And again, I do feel that history will repeat itself. In fact, I'm confident that history will repeat itself, especially given the new launch prices that's happening in 2025. In RCR itself, you're seeing Aria Arena East, you're seeing Aria already crossing $3,000 per square foot just being an RCR project. So if I were to look at the entire inventory in the market in 2025 in terms of what was being released as well as their launch prices and what were the launch reception, I'm seeing a lot of distribution happening in OCR as well as RCR. In fact, the top OCR raved projects included Alta, which is in Clementi in District 5. You can see 501 units. They were released on 22nd of February. TOP slated for 2028. Average prices on launch day, $2,537 per square foot, 65% reception. Because it's also 1 km to Payton Primary School, which is a good primary school a lot of people are seeking. Parktown Residence, a mixed development, 99-year leasehold, is situated in Tampines, 1,193 units. Again, launched on the same weekend as Alta, TOP in 2028, $2,360 per square foot on average on its launch day, 87% reception. Just by looking at these two, and these are OCR projects that are well received, I have no doubt that Faber Residence, even when they actually border along these 2003 and 2005 per square foot average launch day pricing, people would still also grab it. And in fact, let's look at Lentor Central Residence, one of the other hot OCR new launches that come out in the Lentor Hills collection. In fact, it's actually the 7th development in the Lentor Hills collection, 477 units, launched just a month later than Alta as well as Parktown, 8th of March, TOP 2028, $2,200 per square foot on launch day. And I remember I was having a wedding dinner that night and it was 6 p.m. and they've already announced 93% sold simply on the first day. That's insane. In fact, Aura of Tampines, OCR as well, the average pricing is $1,766 per square foot and 90% reception on launch day. In fact, now it's fully sold out after the second round of balloting. And I were to look at the other OCR launches. This is the EC. EC, the prices is $1,700 per square foot for Auto Place, 59% reception. And the rest are actually a whole slew of CCR launches, Robertson Opus, Upper House, River Green, and then Promenade Peak, which is artisanal RCR project, Canberra Crescent Residences. Again, you see 376 units, released on 2nd of August, $1,974 per square foot on average, 40% reception. In fact, the 3 betas are priced at about $1.6, $1.7 million and it's almost gone by now. Springleaf Residence, just now we've mentioned it, released on the 16th of August, is a 941 unit development, $2,175 per square foot on launch day itself, 92% reception. So I hope you can see what is the kind of palatable price range that you're seeing for OCR launches, especially for this year. You're having launches that are like 2005, 2003, and they're like 65%, 87% received simply on launch day. You also have $1,974 per square foot launches on average on launch day like Canberra, and 40% received, and now the 3 betas are almost gone. And you have Springleaf Residence, which sold 92% of its inventory on launch day for $2,175 per square foot on average. So I'm near as confident that even if the prices were to cross $2,100, $2,300 per square foot, it will be extremely well received, given that it's actually also very, very near upcoming transformations of the Greater Southern Waterfront area, as well as the Jurong Lake District, which is slated to be Singapore's second CBD. And in fact, these are the slew of launches that will be happening alongside Faber Residence. You can see that Penrith, Zion Grand, The Sand, as well as Sky at Holland, they are nowhere in OCR anymore. They're in RCR as well as CCR, and their prices on average would definitely be higher than that of Faber Residence. In fact, the other Lux project that's coming up is W Residences Marina View. It is a CCR new launch, and in fact, it will be slated to release sometime in the next couple of months. Date is undisclosed yet, but we know it's going to be something that is more towards the Lux market, and of course Newport Residences for the ultra Lux players. Okay, so if I were to zoom in and see for OCR itself, what were the new projects that happened in 2025 and what were their launch prices? So these are everything that you see over here. All of them are 99-year leasehold. Only Bagner House, which is in District 16, Upper East Coast Road, is freehold. The rest are quite large in terms of its development density. You're getting about 300, 400, 500 units in its development itself. And they're going to TOP between 2028 as well as 2029. Their launch prices, I think this is very important. They range between $1,900 all the way to $2,500 per square foot, and I removed these 2 EC out of the consideration set. But even so, if Faber Residence were to launch at $1,900, just like how I'd say Norwood Grand launched $1,900 per square foot on average, Canberra Crescent $1,900+ per square foot on average, or even let's say Springleaf $2,175 per square foot. Look at its reception rate, 92%. Look at the rest, 93%, 87%, 65%. I think it's extremely healthy, and that's why a lot of people are looking towards Faber Residence. So if I were to look at the expected price matrix for Faber Residence, I'm looking towards $2,100 per square foot all the way through to $2,300 per square foot on average. It can even go up to $2,400 per square foot, and I have no doubt it will actually sell out. In terms of why I landed at these prices, and it's because for Noah Grand, it was released in 2024 after close to a decade long without the GLS released in Woodlands itself. The developer profit margin attained from that on launch day itself was about 15.5%. For Springleaf Residence, we got about 21.9%, and this is actually one of the biggest indicators because Springleaf Residence just came out 2 months ago in August. And the thing is, Springleaf Residence is also jointly developed by, you got it, Guoco Land as well as Hong Leong Holdings, which is also responsible for Faber Residence. So if I were to look at a 2-bedroom, the 646 square feet, which makes up 20% of its unit mix, it can be as cheap as about 1.2, 1.3 range, but realistically speaking, for them to make a decent profit margin, 1.356 all the way through to about 1.485, and in fact even up to 1.55 depending on which stack itself. And for the 3-bedroom wise, there are 4 different unit types. In fact, it makes up 50% of its unit mix. For the 797 square feet, I'm looking at it realistically being priced at about 1.673 all the way through to about 1.833 and even up to 1.9 million, and I think it's going to be highly received as well. 818 square feet, $1.7 million all the way to about $1.9 million. 861 square feet, $1.8 million all the way through to about $2 million. And 1033 square feet, $2.1 million all the way, you guessed it, to about $2.4 million. For the 4-bedroom wise, you have 3 different unit types. The 1119 square feet starts from $2.3 million all the way to $2.6 million. That's what my sensing would be. 1206 square feet, $2.5 million all the way through to about $2.8 million. The 1270 square feet from 2.6 all the way through to about $3 million. And for its 5 beta, $3.1 million all the way through to about $3.5 million. And I feel that just by looking at these charts, if I were to look at Norwood Grand's average price of about $1,900 per square foot simply on launch day itself, with about 80+% reception simply on launch day, the prices can go as cheap as what you're looking at over here. Plus, it's a low density development, so I'm seeing very, I would say, dwarf blocks of up to level 5. And in fact, the pricing can't really be played towards how high the units can go. It's more towards which stacks are much better and which stacks are more premium. And that's how the developers will actually price the units differently instead of homogeneously. So just by looking at these matrix, I'd say the prices are extremely well received. And I anticipate very going to be very popular for family-oriented individuals. The quantum pricing itself is extremely fair. That's all I can say. So we want to look at whether the surrounding resales are going to be a positive price support or a warning sign. And why I look at this is because traditionally, if we look at what makes investors a lot of money, is actually nailing down and securing a very good entry price. And part of having a very good entry price is also buying today's pricing instead of buying a future pricing and hoping that the future profits would be dealt with by a higher future pricing that you're going to exit at. So if you want to have a safe entry, profits will be inevitable. So let's look at what the prices are for the resale. So if I were to look at within the 1 km radius, there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There are about 11 different competitors and developments that are within the 1 km radius. In fact, let me just narrow it down to within 500 meter radius, and that TOP post 2015, so that at least they are one of the closest and apple-to-apple comparison to Faber Residence. We're looking at Waterfront at Faber and at TOP in 2018 with 210 units. And I'm looking at Whistler Grand. Whistler Grand itself, it's TOP in 2023, 760 units. And Park Riviera, TOP in 2020, 752 units. Over here, and Twin View, TOP 2022, 520 units. So what's happening over here? In fact, 1, 2, 3, and 4. The only thing that's on the side of the river with Faber Residence is actually Waterfront at Faber. And of course, you have the whole slew of D5 new launches in this cluster over here. So if I were to look at a 2-beta price per square foot as well as the quantum comparison, in terms of Waterfront at Faber, it's an 11-year age gap from Faber Residence, and it's about $1,545 per square foot already. You can see it's denoted over here. For Whistler Grand itself, recently TOP 6 years age gap, $1,880 per square foot. You can see over here the prices over here. And because it's one of the most recent, no doubt the prices are actually one of the higher ends in the whole resale pool. If I'm looking at the second highest, I'm looking at Twinview, 1819 per square foot, 7-year age gap, and of course, in terms of the third highest price in terms of the resale comparisons, Park Riviera, 1694 per square foot, 9-year age gap. What I can derive from this is that if you're newer, because all of these are 9-year leasehold and all of these are OCR projects within DeFi, because mind you, because DeFi itself is a hybrid district with OCR as well as RCR. So if I were to look at everything, the prices do really complement the age itself, the tenure as well as the age of the condo. The more recent the tenure is, of course, the higher the prices are. And if I were to look at what are the 2-bedroom average prices across these different resale developments, I'm looking at Waterfront at Faber, already $1.08 million for its 2-bedder. Whistler Glen, one of the most recent projects in its 1 km radius, $1.125 million. For Park Riviera, $1.085 million, and for Twinview, $1.038 million. So you can see that a lot of the different competitors, they are actually between $1 million to $1.1 million at best. So you do want to stay within that kind of price range just so that you can buy into today's price. So in terms of the 3-bedroom perspectives, I want to look at what is the price per square foot. So first, we have the top one. It's actually helmed by Whistler Glen, 1910 per square foot with a 6-year age gap. No doubt it's actually one of the newest in the block as well. And then you have Twinview, 1859 per square foot. It's the second newest in the area. And then you have Waterfront at Faber, it's one of the older ones, 1565 per square foot with one transaction happening in the first quarter of 2025. And for Park Riviera, you can see that the prices actually dip, and that's not the case, but it's actually because there were 2 transactions that happened. One of which was by a level 36 high ceiling penthouse unit that sold for about $1,205 per square foot. But otherwise, the average price, as you can see over here, have already climbed to between $1,700 to $1,800 per square foot. In terms of its quantum, you can see the quantum here. The 3-bedders, they range for Whistler Glen, $1.459 million. For Park Riviera, $1.529 million. For Twinview, I'm looking at $1.602 million. And for Waterfront at Faber, $1.668 million. So you can see that in terms of the quantum for the 3 bedrooms, they range between very wide gap, $1.45 million all the way to $1.668 million. As a very stark comparison compared to the $1 to $1.1 million as compared to the 2-bedder. Okay, you can see over here there's a 200k gap. So you just want to be within that gap of 1.4 to 1.6. For the 4-bedder itself, we want to investigate whether there is a trend between a higher, more upgraded unit type from a 3 to 4-bedder or even 4 to 5-bedder, whether people are willing to pay higher per square footage for more of an own stay kind of unit type, I would say. So if I were to look at, let's say, the 4-bedder, and let's say I were to look at the Twinview because it's actually the highest, 1906 per square foot. In fact, if I were to look at the 3-bedder, it's 1859 per square foot, and a 2-bedder, 1819. So you can see people are actually generally willing to pay much higher in terms of its price per square foot for the bigger unit types because it's more towards something that's family friendly and more for a longer term own stay kind of unit. And you can see that the supply-wise, and in fact what's transacted, you have 1 unit within the quarter, 1 unit here within the quarter, 1 unit here within the quarter, and 3 units here with for Whistler Glen itself. And across the board, you can see that the price per square foot have actually risen if it crosses the 3-bedroom mark. And then if I were to look at the 4-room quantum, the prices range between $1.7 million all the way through to about $2.38 million. So if you want to be in today's pricing for the 4-bedroom, you're going to be between $1.7 to about $2.38 million. And last but not least, for the 5-bedroom, you can see that Twinview itself, the prices was about $1,906 per square foot. And it's because, of course, it's a 5-bedroom. Usually people who buy a 5-bedroom are buying it for own stay because they have a big family and it's very needs driven instead of wants driven. You're seeing a much higher price per square foot of $195 per square foot. And very few transactions, that's why you see a distortion between, a transaction recorded in quarter 2 of 2025 versus the ones that recorded 3-4 years ago in quarter 2 of 2021 and quarter 4 of 2021. So you can see that the supply for 5-bedroom here is actually extremely limited. So if you can get your hands on a 5-bedder, then of course you have the bargaining chip. Again, these prices are not today's prices. They happened about 4 years ago. But one of the most representative prices for a 5-bedroom resale in the area, which is Twin View. It's a 9-year age gap itself, 1958 per square foot already. And for the quantum itself, 2.58 million for a 9-year age gap from Faber Residence. And if I were to look at 2021 pricing, they range between $2 million all the way to $2.8 million for waterfront at Faber, which is one of the most tenured resale in its 1 km radius. So if you can fall between $2.5 or even $2 million to about $2.8 million, and I'm looking at 2021 pricing, you'll be extremely fair in terms of pricing. So if I were to summarize everything in terms of the price per square foot, and mind you, everything is actually non-area harmonized, with the Grand Twin View Park Riviera waterfront at Faber, you can see that they are very tenured. The 2-bedder itself, they range between $1,500 per square foot all the way through to about $1,880 per square foot. The 3-bedder itself, they range between $1,000, I'd say properly, about $1,565 per square foot to about $1,910 per square foot. Because if this wasn't sold at the average price of about $1,386, the average prices are actually about $1,700 and $1,800 per square foot on average. And if you're looking at a 4-bedroom, you can see that the price distribution actually become a little bit higher. The average prices range between $1,757 per square foot to about $1,906 per square foot. And lastly, for 5-bedder, which Park Riviera doesn't have, they range at about $1,958 per square foot just by looking at what's happening in the current. So you can see that a 5-bedroom is severely supply constrained. So if I were to look at the quantum itself, just to determine what is today's safe price in terms of quantum, if you can enter a 2-bedder at about $1 million all the way to about $1.125 million, I would say it's extremely safe. For a 3-bedder, if you can enter between 1.4 to about 1.6, extremely safe. 4-bedder, I would say 1.7 million all the way through to about 2.38 million. It's an extreme steal given the fact that they are extremely tenured as compared to Faber Residence. And 5-bedroom, we take the most recent data point, which is 2.58. If you enter anything in the 2.58 to about $3 million range, I would say that it's a very good steal, because the longer you hold, of course, the supply is actually determined by you. Okay, so where exactly is the opportunity in District 5 amidst the outstanding inventory that's happening in the RCR and the OCR in District 5? There are, of course, some of them are pre-area harmonized. So let me just show you the breakdown. So if I were to look at the recent District 5 launches and its prices, everything from Twin View, Kent Ridge Residences, Whistler Grand, Park Clementes, Claiborne, Normanton Park 1 North Eden, they have already attained its TOP. And their prices are as low as about $1,200, $1,300 per square foot, all the way through to about $2,000 per square foot, and that was about 4 or 5 years ago. If we look at the present, what are the balanced inventory today? I'm looking at everything down off Terra Hill, Blossoms by the Park, the Hill at 1 North, the Hill Shore, Alta, Bloomsbury Residences, and Lindenwood. So in fact, the pre-area harmonized projects, Terra Hill they have the lowest price at about 2002, Blossoms by the Park 2001, the Hill at 1 North 2001, the Hill Shore 2003, and 2002 for Alta. This is the post-area harmonized project. Bloomsbury 2003, and Lindenwood's pre-harmonized is 2001. So in fact, if I were to adjust these two, they range at about just over $2,100 per square foot. It's actually much cheaper than the pre-area harmonized lowest per square footage, as you can see over here. And what I'm saying is that if Faber Residence, having a $900 per square foot per plot ratio land bid, were to launch similar to how Norwood Grand launched in 2024 at $1,900 per square foot on average, or how Springleaf Residence actually launched, which is just over $2,175 per square foot on average, with a 92% reception on its launch day, I'd say just looking at these inventory, Faber Residence will have no problem garnering a lot of attention as well as reception for its launch day pricing, as long as it stays at about $2,000, $2,100 all the way to about $2,200 and $2,300 per square foot. And I believe that the developer will have already made a lot of margin just based off those average prices. And that's why a lot of people are also looking towards Faber Residence as one of the hottest launches, especially towards the late of the year. So if I were to look at Alta itself, I think that's one of the closest comparison for the OCR projects in District 5. Alta received 65% reception on its launch day for $2,537 per square foot. And Alta itself is not in the RCR of District 5. In fact, it's the OCR of District 5. And the school was one of the biggest selling point. And within its preview itself, it's drawn over 4,500 visitors for its 501 units itself, which is almost, I would say, 9 times subscribed in terms of its visitations. And if I were to look at Alta, it's one of those D5 new launches that's in OCR and it was extremely well received, and the market was more than willing to pay top dollars for, mainly because of its location as well as proximity to its Payton Primary School. Alta itself in Q3 of 2025 attained an average price of $2,613 per square foot. And if I were to compare pre-area harmonized projects, okay, the ones that TOP between 2020 and 2024, everything that you saw over here. And if I were to look at the leasehold, which is the orange line, the average prices are about $2,012 per square foot. For the freehold / 999-year leasehold, it's about $2,016 per square foot. Very, very similar. The tenure doesn't really matter as much as you can see over here because they do converge after a while. The gap is about $600 from its own district average, regardless if it's freehold or leasehold. And if I were to look at the quantum itself, I'm looking at about $2.995 million for its 3 beta. And if I were to look at the 99-year leasehold projects, it's about $1.642 million for its 3 beta. And if I were to look at the 999/freehold projects, it's about $1.72 million. Again, the resale prices are within the $1.6 to $1.7 million range. But if I were to look at the Alta prices as of now, the gap is almost a good $1.2 to $1.3 million higher in terms of its price tag as compared to its own district launches. So Alta was extremely priced ahead of time, but yet people were still willing to pay top dollars for it. This begs the question, right? Faber Residence, given its low-rise status, is it going to be a profit blocker even though the price per square foot for its land is cheap? The launch price might be something that is very palatable and it will be very well received by the public if it were to launch for below $2,300 per square foot on average. So if I were to look at a potential developer pricing strategy, it's not going to be something that the higher you go, the higher the prices will be, because it's more sparse in terms of its distribution, 9 blocks of up to 5 stories high, 399 units in total. So one of the case study that is closest to Faber Residence will actually be Kenrich Hill Residences, which is in the same district as Faber Residence in District 5, but it actually attained its TOP in 2023, so it's about 6 years age gap from Faber Residence. Kenrich Hill Residences lies in the RCR of District 5, and that's different for Faber Residence, which is OCR of District 5. In fact, the average price you can see over here is about $1,936 per square foot, and it's already hit its resale prices already. Okay, so again, it's 11 blocks of 5-story high buildings containing 498 units in total, plus it also has 50 strata terrace houses. So I'll take the example of Kenrich Hill Residences, so you can see that this is actually the profit table for the different unit types and its different levels. In fact, Kenrich Hill Residences, the lowest floor is level 1, the highest floor is level 5. He has 11 different blocks of up to 5 levels, and as you can see, 50 strata terrace houses. So we don't look at the strata houses because they are a different class of assets, but we want to look at the profits. So the profits of course do favor the unit types that are much bigger in terms of size, but I want to see what's the difference in terms of its prices. You can see that if I go down the profit distribution, you can see that they range between level 3, level 4, level 3, level 5, level 1. So one glance, you actually don't really see that there is a difference in terms of its level. It's more got to do with, of course, how big of a unit that you buy into, and that actually determines your profit, and also the gap between the price that you buy at versus the price that you exit at. Because you see over here, the price that this person actually exited the 2 beta was at $2,013 per square foot, whereas this person exited a 5 beta for $1,900 per square foot. It's not about how high you can go to get the highest price, but it's actually the gap between the sale price as well as your purchase price. So if I were to look at Kenrich Hill Residences, these different blocks, 66, 64A, 64, 62A, 62, they're all looking towards Kenrich Park. And if I were to look at something that is road facing, South Buona Vista road facing, 68, 50, 50A and 52, they are towards the road, and everything in between, they are internally facing, depending on the stack. If I were to look at the 2-bedroom wise, this is the difference between the sale price as well as the purchase price per square foot. And this gives you the absolute difference in terms of the price per square foot by which they actually sold at. So you can see that I've actually arranged them from the highest all the way to the lowest. And in spite of which, you see that there's a fair distribution between the low floor units all the way to the high floor units over here, and again to the mid floor units, and again to the mid to high floor units. So it really doesn't matter how high you buy, because in the end, the prices and as well as your profits is largely determined between the sale price as well as the entry price that you buy at. You want to always maximize the difference of which, and that creates the biggest profit lever. So for the 3 bedrooms, this actually shows you whether they are affected by the inward or outward facing in terms of the carriage park view or the inward pool facing. So if I were to look at, let's say, the same block, inward pool facing, they yield at about $239,000, $288,000 in terms of profit. If I were to look at outward facing, this is carriage park facing, $285 per square foot. Again, this is favored by a larger floor area. The marginal increase in terms of its per square footage is actually not a lot. In fact, it's about $6 higher than the highest in the inward pool facing, as you can see in block 64. So you can see that it doesn't actually matter. It matters more the price that you enter at as well as the price that you exit at. So as you can see that the profits are actually mainly determined by today's pricing and what you enter at, not really how much you exit at, because they do actually converge to the mean if you actually see the trend line. So how will Faber Residence expected prices rival against that of upcoming supplies? So if I were to look at Faber Residence, how would their expected prices rival against the upcoming supply? So what constitutes upcoming supply? So number one, we look at the balanced supply in District 5 because they are the closest comparison as compared to Faber Residence, because they will also be the future price support for Faber Residence. And good thing is that a lot of these developments that have balanced supply, they will be attaining its TOP before Faber Residence attain its TOP in 2029. If I were to rank them in descending order, Linden Woods will attain its TOP in 2029, the same year that Faber Residence does. Bloomsbury as well, 2029. The balanced inventory for these two are actually starting from $2,355 per square foot for Linden Woods. Bloomsbury is post-area harmonized, $2,416 per square foot. And this is not got to do with which unit type, it's just which is the cheapest starting price per square foot for its current balanced inventory. For Alta itself, $2,193 per square foot. This is more for the large floor plate area because the smaller floor plates are actually snapped up. The Hue at One North, $2,074 per square foot. The Hue Shore, $2,284 per square foot. Blossoms by the Park, $2,196 per square foot. Carrot Hill, $2,233 per square foot. And these different launches, including Linden Woods, they are non-area harmonized. So you can see here, these are the balanced supply, and they don't add up to a lot of supply as well. In fact, a lot of these supplies are actually reserved for either the 1-bedroom unit types or even the largest floor plate unit types like the 4 and 5 bedrooms, which have a much higher quantum. Okay, and how do we compare it to the future OCR land bids in 2026 at least? So we look at Dairy Farm Walk. Dairy Farm Walk itself, I'm looking at $1,020 per square foot in terms of its land bid price, which is above $1,000 per square foot, and it's clearly higher than that of Faber Residence. And if I were to look at a developer profit margin, if it's 10%, very conservatively, the prices would already start from $2,157 per square foot. I doubt it's going to be just about 10%. If it's $2,400 per square foot, the developer would have gotten 25% profit margin, and I think this would be kind of where the starting range would be. For Lentor Gardens, which will be the 8th project in the Lentor Hills collection, in fact, $920 per square foot per plot ratio for its land, I'd say it's very, very palatable. If the developer were looking for a 10% profit margin, $1.999 per square foot, but I doubt so, because given how well received the OCR market is and how a lot of the OCR projects have already crossed $2,000 per square foot, I'm looking at the developer profit margin being in the 17 all the way to the 20-30% range. So we're looking at prices between $2,001 all the way to about $2,300 per square foot conservatively based on this estimate. For Chuan Grove, it's actually one of the hottest, most looked upon OCR land bids that's upcoming in 2026 because it has already crossed $1,376 per square foot per plot ratio, which is actually higher than that of Sky at Holland. It's higher than that of Penrith, which are RCR as well as CCR projects that I've mentioned, and their land bid prices are not even beyond $1,300 per square foot, let alone Chuan Grove with an OCR status to it. So just by slapping a 10% profit margin up on top of its break-even price, I'm looking at easily $2,722 per square foot starting from, just for a 10% profit margin. So you can see how for OCR itself, the prices will not be anywhere near cheap, especially for the 2026 launches. And Faber Residence, if I'm pulling the future into the present, it actually makes the other competition irrelevant because of its extremely palatable land bid price and hence break-even price as well. Okay, so what's my final verdict? So a couple of considerations that I'll seed in you just so that you can also assess whether it's going to be a viable investment product. So the first consideration I have is that I'll compare it with the non-area harmonized projects within District 5. So why I do this is because within District 5 itself, there are these whole slew of balanced inventory from these different developments that will attain its TOP between 2027 as well as all the way through to 2029. So we just look at something that's going to happen in the more recent time horizon that is happening in 2027. The Hill at 1 North, the Hill Shore, Blossoms by the Park as well as Terra Hill. No doubt they are the RCR part of District 5, but what I'm saying is that the balanced inventory are already at $2,100 per square foot, $2,200 per square foot. And if Faber Residence were to come in at an average price of $2,000 per square foot, the buyers getting less bang for their buck because if you're comparing with the same kind of floor area, because one, for Faber Residence is post-area harmonized, you're getting more bang for your buck in terms of usability of the space, whereas let's say for these developments that are going to TOP in 2027, TOP in 2028, and they're non-area harmonized, you're getting the same unit area but lesser livable space. So on paper, the unit size look the same. But in terms of livability of the space, people would well prefer that of Faber Residence if they were given the same kind of pricing. And if I were to compare that of Alta, which is the OCR of District 5, and it has already attained an average prices of $2,500 per square foot. Balanced inventory is already $2,193 per square foot. I would say that this usually belongs to the bigger unit types, where the quantum is actually managed by the lower price per square foot on average. So already the average price for Alta itself has already crossed $2,500 per square foot, let alone Faber, which is a more recent launch that will be happening end of 2025, in fact, in the next couple of days. Yet, if its prices are below $2,500 per square foot, it will put Faber Residence at a very good state to have price support simply from the first movers from Alta itself. And if I were to look at Bloomsbury itself, again, it has since it's RCR, no doubt, it has an average price tag of about $2,500 to $2,600 per square foot on average as well, and given it's area harmonized, it's a very good price support also for Faber Residence. And Linden Woods, it's non-area harmonized. The balanced inventory is already $2,355 per square foot. Linden Woods itself, it has gotten an average price of $2,600 to $2,700 per square foot on average on launch day. So if I were to look at Faber Residence, it's gonna be the fact that it's gonna be one of the cheapest District 5 launches that's happening amidst the whole OCR as well as the RCR launches that happened even 2-3 years ago. So my second consideration would be the price support from the RCR part of District 5. So again, I will go back to the slide. You have seen from the slide that even for the RCR, because there are more RCR projects that will attain its TOP in 2027 all the way through to 2029, where Faber Residence will attain its TOP. And in fact, Alta is the only other OCR project that will attain its TOP just 1 year earlier than Faber Residence. So the price support will actually come from the prices that are average for the RCR as of now, because if the first day new launch first mover people have already transacted 2425, they are probably going to sell for 2627 on average just to make a bang for their buck. And if Faber Residence were to launch for 2003 even, that would put it at a very steady price of, let's say, $2,500 just to exit. Is also still well within its range. So that's what I'm saying. And it will prime Faber Residence to be an inevitable profit-making development. Okay, and the third consideration is that will there be a lot of supply in District 5 post-TOP? So as we saw in the different examples over here, of course there are a lot of supply that happen across Twinview, Cambridge Hill Residences, Whistler Grand Park, Clementi's, Clairvaux, Normanton Park, so on and so forth. But you can see that the price support also comes from within the new launch increase and price staging that happened. The lowest price being 1214 per square foot, the highest being 1726 per square foot for Twinview. Cambridge is 1423 per square foot and 2154 per square foot on average for the highest for Cambridge Hill Residences. So the price support has actually been built in within the development itself. And of course that's for the new sale, but you have the sub-sale and you have the resales that further increases the prices. So I have no doubt that the supply itself would not be a constraining factor as to whether there will be a lot of balanced inventory. but whether that the price itself will be something that people are willing to pay for and how much they are willing to pay for at the end of the road. Because there will be price staging for across the different stacks within Faber Residence, and that will be the inbuilt price support. But the price support coming from the TOP 2027 all the way through the 2029 developments will also be the additional price support for Faber Residence, given that it's also in RCR, and ELTA being the OCR of the District 5 have already hit on average 2005. So I'd say Faber Residence, if it were to launch at 2003 even, it's going to be extremely safe entry point for a lot of these residents. I've come to the end of the presentation, so I hope today's sharing has actually seated you with a couple of considerations to think about with regards to whether Faber Residence is an investable option for the short towards the midterm for you to make money. And the one thing to take note of is that not all unit types, as well as not all stacks, are all created the same. So it's very important to check in with a trusted advisor or even have a one-on-one consultation with myself to see whether it's something that suits you and your budget as well as your timeline to make the kind of profits that you want to make. My team and I have spent hundreds of hours to comb through thousands of products in the market to find the top investable options as well as the safest entry points. So if you want to know what's in it for you and your budget, do drop us a note in the link in the bio below and a member of the team will reach out to you. With that being said, thank you for watching today's video and I'll see you on the next one.